On to our next speaker this afternoon. Royce Christopher Aguilar is an equity research analyst at FirstMetroSec. He leads the retail research division, specifically in charge of the creation and maintenance of the daily and weekly reports for FirstMetroSec investors and clients. Royce also spearheaded the FirstMetroSec Traders Playbook. That is, of course, what we're doing today. It's a company report that incorporates both fundamental and technical analyses. With his presentation, 2022 Outlook and Strategy, Go with the Fundamentals. Royce, the floor is yours.
All right. So good afternoon, everyone. So I'm Royce Aguilar. Thank you for that kind introduction. So first of all, we will discuss, here's the sequence, right? So we will discuss our market outlook, and then later we'll discuss the picks, and then of course we'll be happy to answer all of your questions. I believe you guys have a lot of questions. Of course, so before I discuss what's our year end, let's address the elephant in the room. I would like to first discuss the key risks to our view, right? So definitely inflation is a top of mind concern for us. So we have a research partner, Development Bank of Singapore. The economists forecast Philippine inflation to hover at 3.7% this year, right? That's within BSP's target. But to be honest, it could surprise to the upside. Yet there are following concerns. First, pent-up demand may come out stronger than so far assumed, right? Especially with household spending really booming, and especially alert level 1, there's a possibility of alert level 0. On one hand, making up for lost time and the pandemic can lead to over-the-top, revenge spending. On the other, the flow-through of savings and available credit is supportive of robust propensity to spend. So, of course, demand-driven inflation, that's our first concern. So let's discuss this, right? This is basically the issue right now. Right, sustained high oil prices brought about by Ukraine-Russia conflict and second round effects on the broader prices. That's the risk, and we would like to discuss four main channels. First is economic sanctions. We're seeing US and EU imposing tough sanctions on Russia. Companies are willing to close operations in Russia. At least 300 companies have closed or plan to close their operations, right? So they're willing to take a hit to basically, self-sanction Russia. So that's the first one. Second is commodity prices, which we have been seeing, unfortunately, because we would like to discuss why. Because Russia is a major producer of several base metals, so aluminum, titanium, palladium, nickel, even agricultural commodities, maize, barley, and taken together, both Ukraine and Russia account for more than a quarter of the global wheat trade. So that's significant. And fun fact, 12% of calories consumed globally, right? Another is supply chain disruption. It could affect land, sea base. That's affecting the sea, the route around that area. And then lastly, financial markets, which we're feeling right now. Risk of sentiment amid uncertainty. Equity markets, of course, tends to go lower if there is an uncertain event. So I'd like to show you several charts, right, before we move forward. That's the median daily pump price. And keep in mind, that's just as of end Feb. Wala pa yan yung March, right? So you expect, for lack of better word, it's a clear breakout, right? And in terms of the second chart, that's the alternative Dubai crude oil price impact on inflation. So given the reopening of the world economy, price commodity like oil have risen at a quicker pace in the past few weeks. So based on BSP's estimates, an unmitigated rise in oil prices will pose an upside risk to inflation. So that's the sensitivity analysis that you're seeing right there, right? So Dubai oil prices can average at significantly higher year on year. Okay, this is another set of price. Yeah, that's the Dubai oil crude price. That's the wholesale electricity spot market prices, which some of our power companies are pegging their supply in, right? So definitely those are charts that confirm that there is a risk to inflation, right? But I would like to discuss before I discuss this slide, right? We have to think that how high can inflation, of course, in terms of salary growth, average 4 to 5%. So if you're talking about what makes us worry, of course, an inflation of at least above 5% is something worrisome, right? So let's discuss other key risks. So of course, emergence of COVID-19 variants can still be a key risk, especially right now we're seeing a lot of people going out there, also public election related events. So those are key risks moving forward. And of course, talking about election itself is uncertain, meaning anything can happen. Elections have consequences and candidates can move markets, definitely. Because we know that the stock market is a forward-looking mechanism, but what happens if we can't price in a certain event, right? So that's why it's quite uncertain. That's why here are some scenarios that we kind of prefer. So first and foremost, the market will cheer at a clear front runner winner, whereas a tight race may raise questions and elevate pre and post election jitters. If you take a look at what happened back in 2016, that was a landslide win, right? And there were clear platforms after the win. That's why you saw the market rally a bit. And the likelihood of sweeping policy changes is high. Which platforms will be, which projects will be continued, which will not be continued. Those are some key risks we're looking forward. But of course, we would like to discuss, right, what is in the price right now? What is already priced in, right? So we acknowledge all of the risks mentioned, but that does not mean we have to stay in the sidelines 100%, especially in the Philippines. Because if you take a look at the Philippines, first of all, it's good to realize where we are on the business cycle. In the US, they have significantly opened, some economic data hovering already beyond pre-COVID levels. So it is worth taking note that they're already in the mid-cycle. Whereas in the Philippines, we're just beginning to reopen. And keep in mind, sa US, they're poised to increase rates already next week. Whereas in the Philippines, we just reopened. There's still room to further reopen. So we'd like to reiterate that we're still in the early cycle where most of the possible growth can come from. So this is a basically our PSI year target. And I would like for us to focus on all the numbers included here on this slide. All right. So in terms of our year-end target, as of now, as of March 12, 2022. So our base case target is 8.7. We have a bear case of 8,100, right? So of course, we have some time to discuss that later in terms of when will it go to bear case, why is it base case, why is it 8,700, right? So let's talk about the qualitative first. On the earnings front, we think that there's scope for meaningful upside in earnings this year, right? So first and foremost, we see the reopening becoming more sustainable with higher vaccination rates and also companies adjusting, to the business scenario right now. Okay, we're also seeing, we also acknowledge supply cost side pressures, although some corporates can pass on prices for now. I'd like to show you later also that economic data remains to be healthy and improving, right? So Dr. Dumlao showed some of those data earlier. So in the next slide, I would like to go for us slowly. A bit parang class lang a bit, right? So we would like to go through how our year-end target will go from base to bear case. But first, let's define one component of that, which is equity risk premium. So equity risk premium, basically, in terms of formula, rate of return on the stock market minus risk-free rate, right? In terms of how we value it, the risk-free rate we use is the US 10-year yield. Question, but the Philippines, we see a higher correlation to the 10-year US 10-year yield as compared to the Philippines. So the bottom line here is qualitative. The bottom line, when economic growth slows and the outlook for the stock market is gloomy, the equity risk premium is likely to increase. Okay, so that's the key takeaway here on this slide. So let's discuss. Okay, base case, guys, 8,700, right? And we have a bear case of 1,100. So you'll see there are earnings estimates when it will go when the bear case comes into play, when the base case comes into play, right? Those are our expectations in the coming at least in the next 12 to 24 months. So on the bottom, you'll see there another sensitivity analysis. For example, we showed to you earlier, equity risk premium. Takeaway, if tumaas yung equity risk premium, right, dahil slower yung economic growth, outlook is also slow. So if you take a look at the sensitivity analysis below, pag tumaas yung equity risk premium, bababa yung PE estimate, bababa rin yung PSEI estimate namin. So the bottom line here is, as of now, we're sticking with the 8.7. We have a bear case of 8.1, but once this invasion prolongs, once this commodity volatility continues, probability of going to our bear case is higher. Again, please, base case 8.7, bear case 8.1. So now let's discuss why we think the market has upside. So in terms of economic data, economic drivers are intact and will foster sustainable recovery, right? So if you take a look at GDP performance there, 5 quarters of decline and then 3 quarters of recovery, and we expect the economy to back to pre-COVID levels in the next 1 to 3 quarters based on that the chart we're showing, right? If you take a look at the 4th quarter GDP, yung nag-reopen yung Philippines, it's quite strong, driven by household spending. So may bala yung households. That's the key takeaway here. Next, that's basically this is a slide confirming what we showed in the previous slide. The purchasing power of households support a faster snapback in demand. Household balances remain healthy. Job market have actually recovered. According to PSA, it's actually above pre-COVID levels already in terms of employment. And then the Philippine capex cycle is underway. If you take a look at the gross capital formation here, let's take a look at moving forward, right? If we're listening to earnings calls in the past few weeks, us analysts have been listening to earnings calls in the past few weeks, and we have been seeing companies significantly increase their capex spending. So that's a good signal because they won't increase their capex spending if they don't have a relatively better outlook in the years ahead. So this is another data, gross capital formation, which we expect to accelerate. If we take a look at the PMIs, that is a leading indicator that shows you how the manufacturing sector is positive moving forward. And it just reached a 3-year high in the month of February. And then there's ample structural liquidity in the economy, right? Monetary policy settings are still record lows. I would like to focus on the second chart here. On the external front, we have record high gross international reserves. And the purpose of international reserves is to mitigate the country's vulnerability to negative risk events, such as the rise of interest rates in the past, and then the global financial crisis and the high oil prices back in 2011 to 2014. So we have that international reserve levels at near all-time highs, which is actually a good thing, especially in the current situation. And then, of course, we have to recognize that COVID-19 situation has improved. The higher vaccination cases, fortunately, diba, below 1,000 levels na siya ulit on a national level. The government is even talking about alert level 0 already. So the COVID-19 situation has improved significantly. And finally, 2022 being an election year will provide tailwinds to growth. Dr. Drumlao showed you earlier yung slight quick uptick in GDP growth, and we don't think 2022 will be different. So election as compared to non-election, 1.3% growth yung difference. So definitely election year, that's a tailwind to growth. We have to recognize that foreigners have not yet been positioned in the past years, right? And that's actually a positive thing, especially sa US, other developed markets poised to increase rates. So if they want higher yielding assets or higher yielding investments, they would look for other countries na nagre-reopen lang, and one is Philippines. So we'd like to discuss our stock picks, right? So before we discuss a specific stock picks, I would like to mention how we actually came up with our picks. So yeah, on the next slide, this is our top 2 criteria, right? Stocks that can leverage an economic reopening. As the economy and market moves on from the COVID-19 pandemic, we see these reopening winners to post earnings and share price performance in the next 12 to 24 months. In particular, we like stocks that have exposure to cyclical sectors that will derive the most benefits in the economic reopening. And then we also prefer index names because usually when foreign investors come back, they tend to buy first the ones that have high liquidity, high investability factors, and those are the index names. Okay, so let's discuss our specific stock picks. So first is Jollibee with a target price of 289. Especially right now, they've been expanding significantly, not only locally but international, right? And they're also an election winner, especially diba, pag public election events, they actually give food to people, and that's another benefit yung mga headquarters. Diba? So beneficiaries Jollibee of reopening and election also. And then one thing is the gains from Smashburger and the Coffee Beaner stock sharing. There's already a clear path to profitability. Diba? That was our concern before, and right now we're seeing clear path to profitability. We like the company now. So target price is 289. Next is FB. For FB, we have a target price of 415 pesos, a significant upside. So keep in mind that beer accounts for bulk of their earnings. Beer is a social drink. Yung mga tao gusto na lumabas, social gatherings, right? Pupuntang beach, Boracay, Palawan, etc. What do? Adults drink, right? And 90% market share on that segment, San Miguel Brewery. So for the food, there's also growth, especially a lot of institutions buy bulk from them, right? From the restaurants. And of course, in terms of concern, as of higher cost, CFB passes that on. And then RHI, of course, mall play. As more people are allowed to go to malls, it benefits RHI as most of its segments are exposed to malls. Diba yung mga department stores, supermarket, convenience stores, specialty stores, toy stores, pet stores are mostly all located sa malls. Target price 83 pesos. And then SM Investments, target price of 1,267. Keep in mind that it has a large exposure across sectors where we see recovery to be robust. Retail, real estate, banks. Those are cyclical sectors. SM is the leader in all of them, right? And then another thing that we like to discuss, diba? You notice a significant drop from SM in the past few weeks, besides the market related, because of it got removed from the FTSE, which most of the market actually was surprised. But for us, it made SM trade at a historical valuations, which for us is unwarranted. So that we should take advantage of buying the dips for SM, especially it's still the top leader across a lot of sectors. For property, Ayala Land, we have a target price of 52. It is still the leader in the Philippine residential market. Right, it's well positioned to benefit from the recovery of malls, resumption of residential construction, and selling activities. Right, it's also the second largest mall developer. We mentioned earlier how a lot more people are going into the malls, and Ayala Land having that huge market share in the segment, they're a beneficiary of that. So in terms of putting a number on it, in terms of upside, that's based from a target price of 52 pesos. RLC, same case, right? Of course, we would also like to highlight that the REIT listing of the BIC RCR, it unlocks the office valuation of Robinson's Land. There's also news that daming in-infuse kay RCR, so at least that's benefit for both companies, and we're positive that the developments in the REIT sector will provide better value appreciation of RLC's prime office assets in Ortigas. SMPH is also a buy for us. We have a target price of 48 pesos for the company. We would like to focus on the second, right? That given the earnings it posted last full year 2021, we updated our forecast. We expect now operating net earnings to grow by around 83% this year, right? And those are the sectors that you see on the slide. It's because. And then for banks, of course, I would like to disclose, before we discuss banks, I would like to disclose that FirstMetroSec is a member of the Metrobank Group, and by policy, we do not cover listed companies such as Metrobank, GT Capital, Philippine Savings Bank, since we're part of the group, right? So we are analyzing the next banks you will see are still the top banks, and I would explain to you the specifics, right? So for BPI, we have a target price of 111 pesos. In terms of management expectations, they expect loan growth to reach 8 to 10% this year, coming from 4.9% last year. Okay, so that beat our 0.5% target. So usually when management discloses upbeat outlook, diba, it's usually reflected sa stock price, which has not yet been totally reflected for BPI. So that's the upside that we're looking for, and target price is 111 pesos. Of course, that's besides the fact that the financials, the banks are also the opening winners, right? So next is BDO. We recently updated our target price for BDO to 190. So of course, BDO is the biggest beneficiary of economic reopening. Since the latter is a catalyst for faster loan growth and improving asset quality. On the second point, it's on track to hit pre-COVID return on equity earlier than we initially expected. That's why we upgraded the target price to 190 pesos. So that's huge upside. BDO is trading at around 120, just 120 right now. Security Bank is also a pick of ours. It's well positioned to capture lending opportunities as the economy further reopens. And then there's upside will come from the rebound in retail banking. Keep in mind, retail banking is usually nandun yung higher margins, diba? And that's what Security Bank is focusing on. So that's where the upside will come from, especially as the economy reopens, retail banking is poised to outperform. So our target price is 150 for Security Bank. Okay. So now we talk to you our ideas, right? See, Mr. Gonzalo Ordonez earlier mentioned what we presented and what's your area we present later are ideas. But what is the next step before you execute the said trade, diba? Using our platform. Of course, you must know what to buy and at which price. So where do you get those type of specific guidance? That's why I'm showing you this slide. Where do you find our research report? So this is our new platform, diba? So research tab, FirstMetroSec, latest reports, nandun na siya agad. And ang ganda ng format, right? Nandun most of our reports are already in there, yung mga latest ones, right? That's the new, if you have a pro platform, thank you. And it's the same. Research tab, FirstMetroSec, latest reports. Okay, so dun yung makuha yung ideas, may kita nyo dun yung price where to execute, right? And then you use our state-of-the-art trading execution features. So of course, one of our reports is Traders Playbook, where this event is got the title from. So, diba? Just 2% ng Traders Playbook. The unique about this is it shows both fundamentals and technical analysis. You don't see a report na fundamentals tapos magbabanggit siya ng cut loss. Not necessarily. This is a report that actually mentions that. It provides you entry, exit point, where to cut loss, just in case the idea goes sour. Diba? Kasi kahit maganda yung fundamentals, sometimes, biglang Ukraine-Russia invasion, biglang babagsak yung price. Where do you sell? That's what the report will tell you. And we are proud to say na at the past 3 years, 70% yung hit ratio ni Traders Playbook. So thank you to all who's supporting our report. This is an example. Diba Nickel Asia, 5 pesos pa lang, we recommended it already. So where do you hear our insights? We have a podcast, Spotify, Apple, Google. You can hear, if you want to hear an in-depth about our sector outlook, it's already on our Spotify. Please listen after this event or bukas sa family. Diba? Sunday bonding, pakinggan natin yung sector outlook ni First Metro, right? Why not? And I would like to show you, we have a new episode coming out next week, guys. We have a new podcast episode coming out next week. And we invited Solar Philippines. So actually, yung guest ko dyan, ka-age ko lang rin, diba? So that already provides you a clue who we invited. Right? So guys, mid-20s lang ako. Yun yung clue. So, thank you. Thank you everyone. I would like to, we will be happy to answer all of your questions later. So, thank you.